Hello and welcome to another instalment of WAM Vault. My name's James Marley, I'm your host and I'm joined by Dania Zinurova, who is the Portfolio Manager of WAM Alternative Assets. Dania, great to see you again.
Hi James, good to see you.
We caught up 6 months ago, which was when you just inherited the portfolio for WAM Alternative Assets. I'd love to hear what you've been doing in that time.
Very busy 6 months for me. The first step was to do the strategy review on the portfolio, to rethink how we construct the portfolio and grow it going forward. Rather than having very fixed strategic asset allocation targets, I adopted a more holistic portfolio construction approach. Second, reviewed the maturity profile of the portfolio. Most of the illiquid assets that we inherited, they have very clear exit strategies. So over the next 2 to 4 years, we will be exiting those opportunities, and by 2025, I expect that most of them will be exited, and we'll keep recycling capital into new investment opportunities. We already had this year one very good exit from one of our private equity investments, and it delivered strong returns. I expect there will be more exits happening this year. Thirdly is new commitments that I've done so far, and it was great to come into the role and have a good level of cash. So I had some room to go and select the opportunities and commit capital to those opportunities. So we've done 3 new commitments so far. And finally, very important component of where I was focusing on is valuation of the underlying investments. So I have monthly update calls with our investment partners when we discuss the investments, discuss any progress that has been made, and how valuations are changing month to month, if they change. We also do very robust valuation assessment every 6 months when we prepare the report for auditors. So that would include reviewing the current valuation approaches for the investments, understanding why those were chosen, understanding what are the market comparables that are being used. So it's a very thorough process that I think does add a lot of value to the portfolio management.
Could you describe to me or explain the holistic portfolio construction process that you mentioned earlier, and tell me about some of the exciting opportunities you're seeing?
Yeah, sure. So holistic portfolio construction approach is very much in line with total portfolio allocation, and it's about starting with the bigger picture, looking at the macro trends with strong tailwinds, and that's a huge value add to any portfolio, identifying those themes that have sustainable, strong tailwinds. For me, in the current market environment, it's about digitalization of our economy and society. It's about growing aging population, climate change, increasing demand for food, but there are also other trends coming up to the market. So from reviewing the market fundamentals, then it becomes more apparent where those trends can be played better from the timing perspective, from the relative valuation perspective. And the examples of how it's actually implemented are our commitments: 1, to Palisade Diversified Infrastructure Fund; 2nd, Barwon Institutional Healthcare Fund; and 3rd, more recent one, Private Equity Mid-Market Buyout Strategy in Australia. So Barwon, for example, it's nicely fit into this growing aging population theme, and it can be played across alternative asset classes. You can tap into this theme by investing in private equity, venture capital, real estate, infrastructure. So how do you choose? It's very important to look at the actual market fundamentals. Where are the valuations? What's the competition? How big is the opportunity set currently in terms of availability of new investments? And then from there, make a decision which asset class to pursue, then going into more top-down investment approach.
Dania, can you talk to me a little bit about how you generate returns in the portfolio?
It's a good question, James, because obviously we talk a lot about capital appreciation and yield and the combination of these two. For WMA, my focus is really bringing it to a more balanced mix in terms of capital appreciation opportunities and income. And it's also driven by the fact that the portfolio is structured as LIC, so we need to think about regular, fairly reliable income returns in order to keep paying dividends and grow profit reserves. So bringing in investments that could provide yield 5 to 7% per annum, which is very realistic in alternative asset classes, but also looking at opportunities that provide very good, strong capital appreciation. And this would be private equity or higher risk return strategies within infrastructure and real estate. And capital appreciation can be different. As an example, with our recent exit in private equity portfolio, Better Medical Fund was invested in 2017. So since the inception, the fund or the portfolio company grew from 6 clinics or medical centers to 35 clinics or medical centers. So this type of private equity strategies, they're called growth strategies. They are focused on identifying and acquiring portfolio companies with this strong growth potential, either expansion geographically or expansion into subsectors. And the investment team would then, once the transaction is complete, would then fund this growth and work closely with the management teams how to expand. Now, the return that we achieved was over 17% IRR, which is a very good return in this current market environment. And those assets, they are in high demand. So we had a very good strategic buyer who was acquiring this portfolio, and another portfolio at the same time. Was quite a substantial transaction.
Well, Dania, if you were to leave investors in WMA with a message on the outlook from here, what would you share with them?
I would say that alternative asset classes represent a very attractive opportunity set in the current environment, and I've been seeing for the last 18 months shift even among institutional and retail investors from more traditional asset classes into alternatives as they continue searching for yield, given what's happening in fixed income world, and also as continually looking for diversification benefits and capital appreciation over time.
Great. Well, Dania, great to catch up again, and thanks for your time.
Thank you, James.